Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely amazing weekend. In today's video, we are discussing a very important level on Bitcoin's chart, the weekly RSI at 44.63. We're going to be discussing the significance of this level, particularly moving into the upcoming weekly candle close. We'll also be running a complete short-term and high time frame momentum analysis, taking a look at some critical downtrends on the RSI, uptrends on the Gaussian channel, key trigger points on the short term, and of course, the likely next immediate moves in the current short-term uptrend consolidation. We're going to be discussing absolutely everything you need to know about Bitcoin moving into the weekly close, and of course, the high time frame charts. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us in the VIP channel. To do this, you can click the pinned comment of the free channel, contact our admin, watch a 10+ minute video showing you what you'll get access to, or check out our 50+ month trading track record. You'll get access to the main VIP channel where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to all of our group chats, our general chat, our trading chart and education chat, our daily video chat, our help, and our community setup chat. That is what you'll get access to. If you're interested, you know how to contact us and join up. Join 700 members. We'll see you in there. Let's dive into the content. So as we can see, guys, there has been this short-term uptrend developing for Bitcoin over the past, I'd say, around 5 to 6 days since that reversal on the short term at 76,000, currently sitting at just over $84,000 moving into the upcoming weekly close, which will occur in literally 24 hours from now. Bitcoin has managed, at least on this weekly, to sustain above two very important levels on this chart. This being the weekly 50 EMA and the weekly horizontal level of support on the RSI at 44.63. This 44.63 level is acting as a trigger point for a major high time frame momentum shift, which will likely lead the price action to a potential reversal, or if broken, a higher time frame correction towards the 200 moving average. So we are at a major crossroads here in the price action, not just from our momentum perspective, but when we're looking at things like the Gaussian channel on the weekly, particularly looking at it on the 3-day, we are retesting the midline again. When we're looking at things on the daily, such as our daily downtrend on that RSI still being very much in play, and the daily downtrend on the price action since essentially the start of 2025, very much still being in play. We are in this decision zone. The price action is seeing some short-term strength for the first time in a while, and it is deciding whether or not it will sustain and continue, or if we fail to sustain above these critical levels we just mentioned, this downtrend will resume. So we're going to be diving deep into all of that content in the video today. Let's start on the market data. So taking a look at our data over here, 24-hour volume, down a fair bit over here. We're down to, just refresh this page for a second. We're pretty much under 100 billion here. This is really low volume environments actually. Some of the lowest volume we have seen for the cryptocurrency market actually since the beginning of 2025. Only 91 billion, down 39%. Liquidations down 46%, 87 million. 36 million from longs, 51 million from shorts. The DXY having retested our major critical area of support, waiting for that weekly candle open over here. We're watching very closely to see the reaction, particularly moving into our upcoming FOMC meeting. The FOMC meeting is just around the corner in 3 days' time. The probabilities currently are in massive favor for interest rate pause at 98% with a 2% probability of a cut. Again, this is less significant in regards to the short-term movement than what they talk about in the Federal Reserve press conference following, as the market is expecting this, and therefore, unless we see a result that is wildly different to the expectations, it is unlikely the actual result will cause too much volatility in the price action. More so, the narratives pushed and the discussions had during the press conference will massively sway the DXY and the risk asset market, so watching closely. The S&P 500 had a pretty shocking weekly candle close below the 50 EMA, below our 5,700 and below the horizontal on the RSI, signifying a potential start of a broader correction here. We need to see this current weekly candle essentially save this chart, pushing back above 5,700, and this will require at least a bullish narrative to be pushed in the FOMC meeting for us to see this. This may be alluding to more interest rate cuts down the line. It may be alluding to a sooner interest rate cut. Anything along those lines will likely save this chart. Until then, while we remain under 5,700 and the 50 EMA on the weekly, the probabilities are in favor of continuations lower. That is it for the broader markets, guys. We have so much to take a look at Bitcoin on at the charts today on Bitcoin. Even though not much has happened in the last 24 hours, there are some very critical levels we need to discuss on the higher time frames. Now, before we get into all of that, you can sign up with the links down below to BitGet, BitUnix, or BingX. You'll do that by clicking the links. That will support the channel, and most importantly, you'll get a lifetime trading fee discount of 15% off all your trading fees. And additionally, you'll also actually enter our giveaway here. Just by joining any of those exchanges, you'll enter our $3,000 giveaway, and you'll also have a chance to win up to a bonus 25% discount for trading fees for life. Now, you'll need to complete certain trading volume requirements for that one, but absolutely everyone who enters the trading, the giveaway is automatically entered if they sign up to these exchange links and at least complete the basic requirements outlined on this giveaway notice over here. So check that out, guys. Sign up to the links. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get stuck back into it. We are starting on this weekly chart. Now, taking a look, first and foremost, the 44.63 on the RSI, very similar to the level we talked about recently on the total market cap. So let's take a look at both of these levels in conjunction with one another. As we can see, the 42.6 on the total market cap is more or less corresponding to the similar level on the Bitcoin chart over here. So we do know that a breakdown of the Bitcoin 44.6 level on the RSI will likely subsequently result in a breakdown of the total market cap 42.60 on the RSI. Now, I've discussed many times that a loss of the 42.60 on the RSI for the total market cap will be a major trigger point for a potential steeper and more aggressive correction towards that 200 moving average. If we historically look at the breakout points, we can see when we actually broke through this level after retesting it as resistance, that is when we saw the breakout of the falling wedge structure, which eventually resulted in a macro bull market and macro continuation upwards. Through the entirety of the uptrend since essentially the beginning of 2023, we have remained above the 42.60 level, even retesting it twice with some major reversals and rebounds in price actions when retesting it, and now the retesting for a third time. So we know that a loss of 42.60 on the total market cap will act as a bearish trigger point for potentially a stronger correction toward the downside. So now relating that to Bitcoin, for us to see the breakdown on the total, we would need to see the breakdown on the Bitcoin chart. Now, if we take a look at the Bitcoin chart, we have got a very similar level, and that is going to be sitting around that 44.6 level on the RSI. Again, if we take a look at from when we had that breakout of the falling wedge structure, which was around about this date over here, around 23rd of January, that is when we broke above that 44.6 level. We have sustained above the 44.6, having retested it once, having retested it twice, and now retesting it a third time since essentially the beginning of 2023. That is basically a year and a quarter now. We have been above this entire, 2023, 2 years and a quarter, we have been above the 44.6 on the weekly. A loss of the 44.6 on the weekly would result in a momentum shift, which could result in a stronger correction toward the downside, potentially into that $50,000 to $60,000 pocket, meeting that 200 moving average. That would be worst case scenario for Bitcoin, and that is why this weekly candle close is so important, is because if we look at the retest of the 44.6 and we look at the low of the price action, we could say that the loss of the 50 EMA on the weekly would confirm the breakdown and close below the 44.6 on the weekly RSI. So for us to be expecting a continuation lower, for us to be expecting an aggressive continuation, which could be a macro continuation down from here, we need to see a weekly candle close below that 50 EMA. And I do not believe we're going to see this in 24 hours, because as you can see, we have a weekly close happening in 24 hours. But if we see the Federal Reserve press conference come out bearish, if we see the narrative pushed in 3 days and 17 hours to be bearish, it is possible that we could see the markets continue down and Bitcoin lose the 50 EMA. And we know that a loss of the 50 EMA would result in a loss of the horizontal level on the RSI for Bitcoin, as well as the total market cap, which could result in a broader, higher time frame market-wide correction. So there is some risk over here moving into the weekly, particularly moving into next week. Now let's talk about the good things. The good things are that while we are sitting above these bearish trigger points, these are technically going to be levels of support and clear invalidation. So while we are sitting above these levels, reversals are very possible, right? We have seen retests of these levels prior. Instance 1, okay, right over here, we retested the 50 EMA. Again, when we retested that 50 EMA with the RSI retest, we were at risk of a continuation lower, but we did not see that. We saw that reversal develop from there. So there's a chance we actually see that happen again. However, we cannot confirm that yet. Now I'll tell you what will confirm that, and we'll get to that in the daily price action. For us to confirm a reversal will develop strong enough, which could prolong, or at least should I say postpone, the breakdown of the 50 EMA on the weekly, resulting in a strong continuation upwards, we are going to need to see two things. We are going to need to see a breakout of the daily RSI, and number two, the breakout of the downtrend we have been in since essentially the beginning of 2025. If we are able to see the breakout of the RSI and the breakout of this downtrend, that would be confirmation we are going to see a reversal on the higher time frames, resulting in that 44.6 on the RSI, okay, and that 50 EMA on the weekly holding as support, meaning it is more unlikely after we break these two levels that we break back below here than it is we continue upwards. So the probability is only shift in favor of that stronger continuation upwards once we see those two things validate. Until then, we are seeing a short-term reversal that has not developed into a higher time frame reversal that still poses the risk of a stronger correction downwards. So that is what we are seeing here, guys. So to be confident this reversal will actually develop to a higher time frame, we still need to see those two things. Let's now move to a 3-day chart, as there are also some key levels on the 3-day we are watching. Now, taking into consideration everything we have just discussed on the daily and the weekly, we can look at the 3-day chart as, I guess, Another source of confluence we can use to validate breakouts and to gauge the overall direction of the current trend. Now, what we can see here on the Gaussian channel is we can see, and this is another reason why I say the short-term reversal we have seen is not really enough yet, we can see the price action has bounced from the lower band of the Gaussian channel, and we are now currently retesting the midline of the Gaussian channel. Now, the midline of the Gaussian channel historically has acted as a trigger point or a reversal point. We can see a very clear instance over here where we've acted as a major point of resistance. We can also see another very clear instance over here where we've used that midline as a major level of support. So it does act as a level of resistance and support, or in this instance, a potential trigger for a continuation higher. So in this instance, what are we watching? We are watching a 3-day downtrend on the RSI. We are watching through a 3-day breakout. Again, if we get the 3-day breakout, it is likely we also have that daily breakout. And if we take a look at our Gaussian channel over here, we are watching that midline on the Gaussian channel. If we are able to break through the midline on the Gaussian channel, it is more likely we see the daily breakout on the RSI. Until then, the midline on the 3-day Gaussian channel is acting as a point of resistance, and what we do notice is generally when we break into the Gaussian channel from the top side, we generally see the price action at least drop below the Gaussian channel momentarily. It doesn't mean we have to continue in that overall direction, but we at least drop below, as we saw over here or over here, under the Gaussian channel momentarily. Now, the reason this is significant is because if we look at where that could result in the price action ending up on the weekly, let's go back to the weekly, dropping below the lower band of the Gaussian channel, and that's the orange line over here. You can see that's the lower band of the Gaussian channel, it's the mid band of the Gaussian channel. We come into contact with the upper band of the weekly Gaussian channel. Now, the upper band of the weekly Gaussian channel will be sitting just underneath the 50 EMA, and we'll be sitting just underneath the 44.6 on the RSI. And what we see historically is when we break into the upper band of the Gaussian channel, we go through it. Okay, so you can see now how the dominoes are lining in alignment for a potential stronger correction. If we lose a 50, okay, if we reject from a midline, lose a 50, lose the weekly, get into that upper band of the Gaussian channel, there we have the confirmation for a stronger correction towards the 200 moving average, which is underneath the Gaussian channel. So we have the potential for that move, and that is why I'm saying you need to be cautious moving into an FOMC meeting, because although we've had a very, very nice reversal here on the short term, right? It's been a great reversal. It hasn't been amazing, but it's been a nice reversal. We just don't have the confirmation yet to say, this is it, we are going directly up. We need to see the momentum flip. We need to see some higher, lower highs break. We need to see the actual trend shift. We need to see the downtrend we have been in break. We need to see more confirmation. Until then, the risk of these steeper corrections are still in play. And people are going to say, oh, well, you're just extremely bearish. No, I'm looking at the charts objectively and realistically, and I'm not looking at the price. I'm looking at what needs to happen for the probabilities to shift in favor of specific directional continuations. If you have been following the channel, you know that I was bullish the entire way up. I sold at 96,000, okay? And then I bought altcoins again, and I sold everything at $104,000 of Bitcoin on the 14th of December, and altcoins have been out of the market. I've been bearish ever since, expecting these pullbacks. And I do want to see the market reverse. I do want to see continuations higher. But again, confirmation is the insurance you pay to be right. I am willing to forego a few percent to ensure that the probability of success when I do enter is significantly greater than taking a gamble. And I'm waiting for the confirmations to confirm that. Until then, while we do not have those confirmations, the potential for corrections again remain in play, especially moving into FOMC, which we know has the potential to completely and utterly change the trend we are in. It has the potential to push Bitcoin directly up here. It also has the potential to result in that close happening under the 50 EMA and us seeing an aggressive correction for the market. So we need to be cautious moving into that. That is it for the broader updates, guys. Let's quickly jump over the short term. And, you know, we've talked about a lot today already. We try to get through these videos quickly, and you know, sometimes 20 minutes is just not, it's just scratching the surface really of all the things we can go about over in a single day. There's just so much stuff to talk about every day, but these are the key things that point out to me every day. I try to cover a few key things, but looking at the daily chart, we've gone through, what, the 44 on the RSI on the weekly. We've gone through a 50 EMA on the weekly. We've talked about the correlation between that and the confluence between that on the total market. We discussed the potential for breakdowns, what would need to happen for a breakdown, and the consequences of a breakdown. We've even discussed potential targets, back those targets up with our technical levels and the Gaussian channel and our moving averages. We've talked about the 3-day chart and how it can be used as a leading indicator for a daily breakout and a weekly breakout. We discussed what needs to happen on a daily chart for the price action to turn bullish and why that is significant in terms of context for directional continuations higher. We're relating all of it back to the FOMC meeting. Now let's talk about the short-term price action. This short-term bounce is nice, but it's not enough. It is not enough. It is still looking very weak. I would want to see, for this bounce to look good, I would want to see the price action break this downtrend here. Until we break this downtrend, the potential for corrections are in play. The reason I say this downtrend is because it is more or less relating to this high. This is a high, this is a high. These are our lower highs. We need to see this lower high break. A breakout of this lower high equals daily trend line on the RSI breaks, equals daily trend line on the price action breaks, equals we essentially go higher. Until then, we do run the risk of steeper corrections. In fact, if we look at the price action right now, I'm not going to make any short-term predictions because of this sideways chop. But if I were to look at this, I'd be a little bit more cautious into this price action, particularly moving into this VRPV cluster, into this steeper uptrend over here, and of course moving into FOMC. I don't think this is showing significant amounts of strength. We have seen over here the last time we had this, you know, sideways consolidation on the weekend, right? This was our Saturday and Sunday period. But this sideways consolidation, we were resulting in a, you know, a Sunday to Monday correction. We are seeing a similar kind of thing happening over here. This Saturday, Sunday consolidation could result in a equal correction if FOMC comes out bad, or maybe it results in a rally if FOMC comes out good. But either way, when we see these tight consolidations, we do generally see reactive moves occur, and the direction at the moment is going to be more clear. If we break this trend line, we expect lower. Until then, potentially up into our resistance at that VRPV cluster. Above there, we go higher. Thanks for tuning in and have a fantastic day. Catch you guys in tomorrow's video for the weekly close. I'll see you then.